Hello and welcome to Market Secrets Investment Series. This is a new offering from Market Secrets team, and the objective of this program is to educate long-term investors in the market and also stress the importance of various other asset classes. So before we begin, we would like to mention that the stocks and the mutual funds that is being discussed as part of this program is based on our personal portfolios and in no way considered as an investment advice. We suggest you to do your own research and if necessary consult with a financial planner before finalizing your investment decisions. So with that disclaimer, let's begin with the program. So on a high level, these are all the items that we will be covering as part of this program. The first and most important item is asset allocation, and then we will talk about mutual funds, different types of mutual funds, and different categories and schemes that is available in mutual funds, and how to select a mutual fund based on technical factors. We'll talk about various technical factors and ratios that is involved in mutual fund analysis. And then we'll talk about direct equity investment, which is nothing but investment in stocks, that is individual stocks, and how to analyze those stocks, what are the various parameters that you need to use while analyzing the stock for direct equity investment, and when should you invest in such stocks. And finally, we will talk about investment in gold and real estate. And considering most of us are small traders who cannot afford investment in real estate, in this program we'll talk about how to invest in real estate with small capital. So we are not going to talk about EMIs or housing loans here. This is entirely a different item which will generate consistent income for you. So this is going to be a really exciting part, and I really think most of you wouldn't have heard about this particular option. And the last item that we'll discuss is about rebalancing your portfolios. And this is the most crucial and important part when it comes to long-term investing. So we'll see how and why we should rebalance your portfolio. So with that being said, let's start with today's agenda, which is nothing but introduction to investing. So the first item is how a stock or a stock market moves. So here we are not going to talk about price action or how the stock moves when it comes to charts. Here we are talking about fundamentals, why a stock or a stock market moves up. Basically, a stock or a stock market can move up due to two fundamental reasons. One is valuation expansion, which is nothing but PE, and the second one is earnings growth. So to talk about earnings growth, it is simple like quarterly results. So if a company is posting healthy numbers, healthy results, then the stock of that particular company will move up. So that is one way a stock can go up. The second item is valuation. So when a valuation of the company is increased or it is raised, then a stock will move up. So this is based on future projection. So it is not based on any solid numbers. So let's start with valuation expansion first. So where do we stand right now with respect to valuation? So for that we need to move to PE analysis. So let's start with index. So this is the actual PE value of index right now. So I have selected index as Nifty 50. And if you look at the PE ratio of Nifty 50, it is at 28.11. Most of you would have heard about this PE ratios and its comparison with the previous stock market crashes. So I'm not going to go much detail into this particular topic, but to put it in simple terms, the PE of 28 is extremely dangerous, and stock market has crashed multiple times. That is in 2008 and 2002 when it reached the PE of 28. So it denotes this is an expensive valuation. So markets are already at peaks. So that is the indication that you can get from the value 28 in PE. So with that being said, the market is considered as highly overvalued right now, and a crash can happen or even a correction can happen which will bring down this PE. But you cannot predict when this will happen. For example, this stock market, that Nifty 50, can trade at this PE level of 28 for almost 2 years from now, and then it can crash. Okay, so you cannot predict when this will happen. So that is not your job. Timing the market is not, a wise thing to do, and you cannot do it every single time. You have to accept the fact that you cannot predict when a crash will happen. But from this data, it is imminent that Nifty cannot sustain this particular PE for a longer time. So that is the data that we get from index PE analysis. And by doing this, we have taken only the top 50 Nifty stocks for our analysis. So let's go a bit wider and take the broader market into consideration. So instead of Nifty 50, I am shifting to Nifty Mid Cap Index. So if you look at the Nifty Mid Cap Index right now, its PE is at 61.47, which is extremely high, and it's too dangerous. And the chances of sustaining this particular PE level is extremely low, and that is another reason I mentioned, like this particular rally looks like a fake rally. And when I move to small cap index, the PE stands at 94.42 percentage. This is extremely dangerous, and a correction seems to be imminent. But if you look at index, it is hitting newer highs every single day. That is, Nifty 50 is hitting new highs almost every single day. It's going up and up and up. And what is the reason? As I have mentioned a couple of weeks earlier, the only reason that I see for the market to rally right now is earnings growth. So using earnings growth as a reason, market is moving up and up and up. But I strongly believe this rally is being utilized by FIIs to exit the market. And since the mutual fund inflows is really high at this point, and even after the last correction that we had in last 2-3 months, this mutual fund inflows are still on the rise. That is one of the main contributors for this rally in Nifty. Earlier, whenever there is a correction, people will, they'll pull their money out of the funds. But now people are a bit more clever, and they are continuing with their investment. So that is one good thing that you can see from, the retail investors. But still, it is dangerous. What do you mean by dangerous here? Is it not right to continue with your investment at this point? So I can hear that question from a lot of folks, but I would suggest to view it from a different context. As I have mentioned earlier in this session, the valuation of the stocks is really high at this point, and no long-term investor would invest in stocks right now. So what I can see right now is a lot of FIAs are pulling their money out, and that money comes from the mutual fund investors. So there are a lot of new people who is first time they are investing, and they are investing a lot of money at this point, and that comes in through mutual funds. If you are going to invest any huge sum at this point, even if it is for a 5-year term, the returns will be extremely low. Why do I say it is not a right time to invest for a long term? As per my analysis, a correction is due. It can be 10 to 20% correction. In worst case, it can even go down as 50%. So with that being said, if you, for an example, if you consider a stock is trading at 1,000 rupees now, and if your target is 1,500, it is basically a 50% growth in your capital. But consider the stock goes down due to a correction, and if it hits 500, that is minus 50%. So in that case, the stock is going to be at 500 rupees. Now, if the if the correction stops and if the market started its up move, then it would take 100% of rise in stock price to reach 1000 rupees. It's as simple as that. When the price drops from 1000 to 500, it is just 50% drop. But if it has to rise again from 500 to 1000, it is 100% rise in price. Can you understand the difference? This is the ultimate reason I'm saying investing at this point is extremely dangerous, and even if it is for 3 to 5 year investment, I would still suggest a no, because the returns will be extremely low. So be very careful before investing lump sum into current market conditions. So this is what we have been discussing so far. Should I invest right now? It is a no for any lump sum investment. But if you are already into a systematic investment plan, you should continue with your investment. That is the same thing that I have mentioned in our Telegram channel as well. So you should continue with your SIPs. If you are planning to start 1 or 2 new SIPs, please do start it. That is not a problem at all. But lump sum investment is not advisable at this point. So before we move on to the next slide, let's go to the chart once. Okay, so you already know Nifty 50 is hitting new higher highs and it is in an uptrend. But if you look at the mid cap index, it is actually it has just broken the downtrend line and it started moving up. If you look at here, the high made in February, it is never breached. And I don't think it will ever be breached in next 1 year or even in 2 years. That is not going to happen at all. And only if that happens, I would believe there will be another fresh up move. But if you look at this chart right now, this has just broken. I mean, the Nifty mid caps index has just broken the downtrend line and it is moving up. But it can very well come down from here. And it will certainly come down from this particular level. So I don't think the correction is done, and we will have a much bigger drop in the next 6 months to 1 year time frame. It can even happen next month. As I mentioned earlier, predicting the timing of the crash is not possible at all. So I would suggest to stay away from mid and small cap investment for now. But if you are already into any SIPs, please do continue with it. After all, it is an SIP. It's a systematic investment plan and you are not supposed to break that system. So with that being said, let's move on to the next item, which is asset allocation. Most of us would spend a lot of time in analyzing stocks, analyzing mutual funds, so that we can get higher returns in the future. But the asset allocation is the most important item when it comes to investment. If you do this wrong, if you don't, focus your attention on asset allocation, you will definitely fail when it comes to long-term investment. So this is a very, very important item. So, we'll talk about this in a very detailed way in the next session. So before we do that, I want you to go through Google and you have to Google on asset allocation and try to understand the basics. We'll talk about this in detail in the next session. If you have any queries, comments or suggestions or any topics that you want to include as part of this investment series, you can mention that in the comment section. Also, if you have any feedbacks on anything that we have discussed so far, you can drop that in the comment section as well. Please like the video if you have really liked this particular session, and if you want more of it, it would be the only encouragement that we would require from your end. Also, share this video with the investors who are entirely new to the market. It will be really, really helpful for them. So thanks again for watching. We would like to welcome you to this new investment series from Market Secrets. There are a lot of exciting things that awaits you in the forthcoming days. With that being said, thanks for watching and have a good day.